So let us start today's lecture on the topic state compensation mechanism. It is in unit 1, state compensation mechanism. It is second last topic of unit 1, state compensation mechanism. As the name suggests, state compensation mechanism. What is hidden behind in this mechanism? When GST was going to be implemented from 1st July 2017, many states have apprehension that they are going to lose their tax revenue from indirect taxes. Why? Because of GST, the maximum revenue earning states will be those where we'll be having more population, where we'll be having more consumption. I'm assuming that if we are having more population, then we will consume more items. Though it may not be true in real life, but on this basis, on this logic, that when there will be more consumption, at that time there will be GST collected and it will go to that state where consumption is happening. In Delhi, we do not manufacture so many items because Delhi is not a big state. It is union territory with legislature. So under GST, we call it as state. Big in terms of area. But so many other countries like Tamil Nadu, etc., they are big in area also, as well as they are having heavy manufacturing activities. Before GST, manufacturing states were also earning the revenue, but after GST is implemented, the consuming states or consuming union territories will earn the revenue. So many manufacturing states were concerned before implementation of GST that our revenue is going to be fall. We need some compensation because of fall in the revenue because of GST, and that is why government brought a new act, GST Compensation to States Act 2017. This entire topic, state compensation mechanism, is nothing but the entire act of 8 pages. It's not a big act, it's a small act. So let me first share with you the original act on which our current discussion is based. So let me share a screen. I hope you can see the screen clearly. Okay, now this is the act. Which act? The Goods and Services Tax Compensation to States Act 2017. The topic state compensation mechanism is nothing but this act itself. But we are not going to do this act in detail. We have to do only a topic. So we must know about this compensation mechanism. And if you see the meaning of this act, the purpose of this act, it is written as this. This is an act to provide for compensation to the states for the loss of revenue arising on account of implementation of the Goods and Services Tax in pursuance of the provisions of the Constitution 101st Amendment Act 16. That's it. Because of implementation of GST, it was necessary to compensate the states for the loss of revenue which will happen because of GST. And it is an 8-page act. So now I will discuss with you my simplified language. We are not supposed to do the entire act. So let us discuss the simplified version of this topic, state compensation mechanism. So I am sharing the new Word file with you. I hope this file is visible. Is this file visible clearly? 1.9 state compensation mechanism. Is it visible? Is it visible to you? Is it visible now? Is the new Word file visible now? Okay. Now see the topic state compensation mechanism. So I will tell you only those points which you have to do for your course. First subtopic in this topic, levy and collection of GST compensation cess. Just like in CGST, we have covered section 9 of the CGST Act, levy and collection of CGST. In IGST, we have covered section 5 of the IGST Act, levy and collection of IGST. In this GST compensation to states act, we will cover levy and collection of GST compensation cess. It is section 8 of GST compensation to states act 2017. Now, on which value this compensation cess is levied and on which value of supply? So it is levied on intrastate supplies as well as interstate. This is one thing. Cess can be levied on intrastate supply as well as interstate supply. Next point. It is applicable for the time being for 5 years. For the time being, it is applicable for 5 years. Now 5 years are starting from which date? When GST came into picture. So CGST Act came on 1st July 2017. So you can say that it is for 5 years starting from 1st July 2017. In which case it is not applicable? It is not applicable to any person who is covered under composition levy scheme. A composition levy scheme person is not at all covered for the purposes of this GST compensation cess. This is my first point. That GST compensation cess is applicable on intrastate supplies as well as interstate supply for a period of 5 years starting from 1st July 2017, and any person who has opted to pay tax under composition levy scheme, on that person compensation cess will not be applicable. Next point. Now this cess is not applicable on all the goods. It is applicable only on very limited number of items. Very, very, very limited. Not on all the items. So what are those very, very, very limited items? Around 7 to 8 items. So you must learn those items. You are not supposed to learn the rates of this cess, but you must learn the 4 or 5 examples of such items on which compensation cess is applicable. Pan masala, GST compensation cess is applicable. Tobacco products, this cess is applicable. Motor vehicles carrying not more than 13 persons, cess is applicable. So when you go to purchase any motor car from showroom, any car from showroom, on that invoice you will find this GST compensation cess. That's it. You can learn only 3 or 4 examples. Pan masala, tobacco products, aerated waters, and then motor vehicles carrying capacity not more than 13 persons including driver. You can learn in these 4 examples on which GST compensation cess is applicable. I hope it is clear to you. Then next point, what you should remember. On this compensation cess also input tax credit is allowed. If I have paid GST compensation cess to any party, and when I further supply that product, and if there is GST compensation cess applicable, then whatever GST compensation I have paid earlier, I can claim now as input tax credit. But if you remember the manner of utilization of this cess, in case of CGST, etc., it was different. IGST input tax credit can be adjusted against IGST output as well as CGST and state output. But this GST compensation cess input tax can only and only be adjusted against GST compensation cess output. Any doubt till this point? I have covered these 3 points for the time being. That GST compensation cess is applicable on intrastate as well as interstate. It is applicable on very, very limited items. And input tax credit of compensation cess can only be adjusted against output compensation cess. This cess cannot be adjusted against output IGST, output CGST, output SGST, output UTGST. Input compensation cess can only be adjusted against output compensation cess. Any doubt till this point? You ask me, otherwise I will proceed to the next point. Okay, next point. Now base year is a very relevant concept. Base year. Now how much loss? Because at that time, before 1st July 17, there must have been some expectation of the loss. Otherwise, tomorrow anyone can demand any amount from me. So what states and center decided that you give us the rough approximation of the loss, estimated loss. Now to compute anything on estimation basis, you must be having some foundation. So base year is the foundation of computing GST compensation cess imposing issues. How will we charge GST compensation cess? How much to be charged, and how much to be given to the states? For this, we must be having some rough approximation of the estimated loss. For this, it was necessary to have base year. So let me first discuss with you base year, then I will make you understand the other concepts related to the base year. Now GST was going to be implemented from 1st July 17, but before 1st July 17, in 2016, the Constitutional Amendment Act, 101st Amendment Act was passed. So one thing was sure that sooner or later we will be having GST. Now when sooner or later it comes into the mind of the people that very soon we will be having GST, there would have been some fluctuations in their sales. People would give a now if you remember 2017 here, July 17, before July 17, in April, May and June 17, sales of most of the products fell down because companies or the manufacturers were not getting clear instructions of transition from earlier indirect tax regime to new regime. Till 30th June, we are having old system, and on the very next day we are having new system. So had there been more stock inventories, there would have been many problems with the producers and consumers or their accounts department. So what companies did, they reduced their stock in the month of April, May and June 17. They wanted their inventories to be cleared so that when they will move from old regime to new regime, there would not have been any problem of accounting or many other tax issues. So it was expected that time period near to 1st July 17 will not give the correct picture of actual sales. And when sales fell down, obviously the revenue of the government fell down. So my financial year, as far as 1st July 17 is concerned, before 1st July 17, which 31st March comes? 31st March 17? Now 31st March 17 is in which financial year? 16-17. So government expected that 16th, 17th tax revenue of any state during the financial year 16-17 is not reflecting the correct picture of tax revenue. Because in 16th we had the Constitutional Amendment Act already paving the way for GST implementation. Company, corporates as well as the government expected that 16th, 17th, 1st April 2016 till 31st March 17, this financial year was giving wrong picture of tax collection. Every government expected that in this financial year 16-17, whatever tax has been collected is actually less as compared to the normal situation. So they said, or everyone decided that 16-17 should not be base year, but 15-16 could be taken as the base year, latest year, and without having any fluctuations because of expectation of GST. That is why government decided, this union ministry and the state government decided that to compute the expected losses, the base year should be financial year 15-16. That is why. So the base year for the purpose of computing expected loss because of implementation of GST, that base year will end on 31st March 16. And if any year ends on 31st March 16, the financial year is 15-16. So financial year 15-16 is the base year. One thing. Second point. What is the transition period? If you remember or if you see this line, what it says, for the purpose of computing the GST compensation amount payable in any financial year during the transition period. What is this transition period? So Act defines transition period. It says 5 years. From what? From the transition date. Before this concept also, I have already told you that GST compensation cess will be applicable in India for 5 years. And this 5 year is nothing but transition period. So transition period means 5 years starting from the transition date. Now what is this transition date? This date is nothing but that date when any state GST comes into picture. So normally 1st July 17 is except J&K on 1st July 17, every state was having the SGST. So this is the base year. But what is the base year? 2015-16. This base year will help me in determining my expected losses of next 5 years, starting from the date when GST is implemented. So let me show you on board this point. Is this board visible? Can you see the board clearly? Okay, now you see the relevance of base year. Is my voice clear? Am I audible? Am I audible? Is my voice clear? Now what is my base year? So what is my base year? My base year is 2015-16. GST was implemented on 1st July 17. So there will be a loss in this financial year 17-18. So financial year 17-18 is the first year of transition. Second year of transition. 18-19. Third year of transition. 19-20. Fourth year of transition. 20-21. These are the 5 years of transition period. In these 5 years, states will get some compensation if there is a loss in revenue. Last financial year was 16-17. But it was not a normal year. It was not a normal year. Financial year 16-17 was not the normal year. So that year was not taken as base year. That year was having some information of GST. So states expected that the revenue, tax revenue in 16-17 is not our actual revenue. But year 15-16, last year, was complete year without having incorporation or without incorporating any exceptional situations. So year 15-16 was considered as normal year by everyone. So 15-16 is the base year. Now whatever is the tax collected in 15-16 by any state, for example Maharashtra, if Maharashtra government collected in 15-16, for example 80,000 crore as tax, if Maharashtra government collected in 15-16 80,000 crore tax, if this is the collection, I am using the word tax. In reality, you need to know that what is included in this tax. There may be hundreds of taxes. So I will tell you what is included in the tax. If in 15-16 Maharashtra's actual collection is 80,000 crore, on this basis, it is expected that in 17-18, had there been no GST, the tax collection would have been how much? Had there been no GST in 17-18, the Maharashtra government would have got 14% extra than the last year. So in this year, my expected collection of Maharashtra, as far as Maharashtra is concerned, in 17-18, had there been no GST, expected collection of Maharashtra would have been on this basis 80,000 crore multiplied by 114%. That will be equal to 91,200 crore, 91,200 crore. This is the expected collection had there been no GST. And then what they will check after GST, what is their actual collection? If in 17-18, because of GST, the collection is 90,000 crore, for example. If collection is, for example, actual collection, this 91,200 crore is expected collection had there been no GST. 90,000 crore is actual collection because of GST. Now, what is the difference? How much is the loss to the Maharashtra in 17-18? Now, there will be a compensation to the state Maharashtra of 1,200 crore rupees in the year 17-18. I hope this point is clear. Similarly, in 18-19, had there been no GST, what would Maharashtra would have earned? What Maharashtra would have earned last year? 91,200 Again, 114%. So 14% yearly growth. How much is this? 103 103,968 crore rupees. Is it visible? 103,968 crore. It is the expected collection of 18-19 had there been no GST. Now they will check actual GST. If it comes out to be 1 lakh crore, it is actual GST. So what is the difference now? It is 3,968 crore. This is the expectation that Maharashtra would get 3968 from the central government. That's it. It is the relevance of base year. This base year helps me in determining the expected loss of any state. If you have any problem in this illustration, if you have any problem in the calculations, you can ask. Can you see the calculation? Any problem you ask. Okay, great. Shall I proceed now? Shall I proceed? Is this clear? Okay, let me proceed then. Now I think base year concept is clear to you. That what is the relevance of base year? Now I have given you the example that suppose Maharashtra's collection expected is 80,000 crore. Now I am taking the base year as 15-16 because this is what the act says. Then how do you collect the tax revenue of 15-16? How I have arrived at the figure of 80,000 crore in 15-16? So you have taxes to be added which have been merged into GST. This is the calculation of base year revenue. You are not supposed to learn the entire concept of base year revenue. In general, 1 or 2 lines, you must learn this thing that while computing base year revenue of any state, all the taxes which have been merged into GST, their total collection would be added to compute the base year revenue. That is sufficient for you to check how much is the base year revenue for your level. There is no need to read this detail of base year revenue. But I have told you sufficient only in one line. All the taxes which have been merged into GST, total of those during the financial year 15-16 will give you the total base year revenue of any state. Next point, why I am adding 14% every year? Because it is known as projected revenue and projected growth rate. This 14% is given in the act that every year you have to add 15% increment as compared to the last year. And then what you have to do? You can skip all the topics. There is no need to do these topics. So don't read those which I am not telling you right now. That's it. So let me discuss with you a small illustration. After this, my topic will be over. Suppose the assessable value of motorcycle with engine capacity exceeding 3500 cc is rupees 1 lakh. 1 lakh, which is supplied from the state of Gujarat to Delhi. So Gujarat to Delhi, I am assuming this as what? Interstate supply, on which IGST will be charged. So the GST rate is 28% and GST compensation cess is 15%. How much will be total value? If 1 lakh is the cost or sale value, in this I will add as a supplier 28% IGST, 28,000, and this 15% cess, it will be added on assessable value, the value determined as per section 15 of the IGST, value of supply. So on 1 lakh into 15%, it is 1 lakh into 15%. Do not compute 15% of 1,28,000. It is this computation of cess in GST is totally different from the computation of higher and education cess in case of IT Act, Income Tax Act. In income tax, we add cess after surcharge. So my cess is on income tax plus surcharge. But in GST, I do not add compensation cess on value of supply plus GST. I simply compute the compensation cess on the value of supply, assessable value, without including any GST. The topic state compensation mechanism is over from my side. If you have any problem, you please ask. Any problem you can ask. Any doubt? Kindly reply through chat window. Is this topic clear or there is any doubt? Okay, so let's have 10 minutes break so that I can record this video and save this video, and I will come back with a new topic, refund and doctrine of unjust enrichment. We will wind up two topics in the next class, and after those two topics, we will wind up registration also. I'll come back within 10 minutes.